There are over 50,000 stocks globally. And so the question of how do you pick which ones to invest in is not only paramount to your investment success, but is also going to be the difference between you making and losing money. Today's video is going to be all about how do you pick stocks and how do you conduct the research process that allows you to know you pick the right ones. So to start, you are going to need to know what stocks to look at. Now, there's actually not a great way to begin with this. There's generally speaking 5 different ways that you can pick a stock. One is you can go to a stock screener. Now, there's many different free resources. You could just Google different stock screeners online and you put in all sorts of different criteria and out pops a list of stocks. From there, you could just pick one at random. That is the first way and not necessarily the best. The second is you can look at what other investors have done. You can actually follow the investments other investors make on a quarterly basis with something that is called a 13F. Any investor that has more than $100 million under management has to file one of these each quarter, and it says what their positions are. Now, as an individual investor, you can actually look these up. They're on the SEC's website, but I recommend you just Google it. That'll be the easiest way to find it. And then you could see what positions they have and start researching those. The third way, and one of the most common ways people actually invest, is they get direct hand experience with a product or service, and then they go ahead and look up whether or not that company is a public company. And if they are, they'll start their research process. The fourth way is that you hear a customer loves a product. If you talk to a friend and they love a product, or maybe you're at work and you hear about how someone loves a certain supplier or vendor, you could then go ahead and research that company. And the opposite end of that is if someone hates a certain competitor, if someone hates a certain company, then you either know that's a company you want to avoid, or maybe they hate it because it is stealing their business, in which case you want to actually look them up and see how they are able to do that. And so there are many different ways you can hear about different businesses and products. What I suggest to you though is you do a dual prong approach of looking at products and services you use in your everyday life and starting with those, in addition to going to 13Fs and looking up what prominent investors are invested in. And that is always a good place to start. Now, we'll talk about other investors in different videos, but for now, we just want to get to the point that you need a list of stocks to start researching through. Now, it is a little tricky because it is very similar to a scientist deciding what experiments are worth running. When a scientist creates a hypothesis, they then go and test that hypothesis in an experiment. However, there's no way to know what hypotheses are worth running ahead of time. So if you think about it, a scientist may have 1,000 different things that they want to test, but they have to pick one to start with. And that is very similar to the position you as an investor are in today. There may be 1,000 stocks you want to research, but you have to start with just one. And so there's no great way to do that. But the advice I will give you is that instead of worrying where you start, what you want to do is very quickly eliminate names on your list. So maybe there's a lot of products and services you like, and you looked up those companies, you made a list of them. There's also a few investors like Warren Buffett, Terry Smith that you follow, and you see that they're invested in these companies, and you added them to your list as well. What you want to do is not figure out what companies are worth investing in. You want to figure out very quickly what companies are not worth investing in, because that is much easier to do. As you become a skilled investor, you will be able to know that a company is a bad company in a matter of minutes. First though, what you want to do is you want to understand this business. Now, I like to say it is like turning up the resolution in a picture just enough that you understand what you are looking at. Now, when someone gives you a stock, let's say someone tells you to research the stock Floor & Decor, and you have no idea what they do, right now you have a blurry image. You can't see anything. And so the object is to, as quickly as possible, increase that resolution high enough so you know what the business does and you have some idea of what you are looking at. And it's the same thing as if you imagine a blurry image online that slowly starts to increase its resolution. Once it gets to a certain point that you know what it is, you can start to make a decision about whether or not it's worth continuing to invest in it. You don't need to wait until it's a perfectly perfectly high resolution image. It's good enough as soon as you know what you are looking at. And so how do you do that? So there's a few ways that you can start immediately researching a company. The first one is you want to read their annual report. Now, every company is going to vary in how helpful their annual report is. For a company like Floor & Decor, I picked it specifically because their annual report is super insightful. It lays out the entire business model. And so you can go online and find the annual report on the SEC's website. So you're going to want to search up SEC Edgar. And once you do that, you can just search the stock ticker, which is FND. If you don't know, every single stock has its own stock ticker, which is what it is referred to when it is traded on the NYSE or NASDAQ or whatever stock exchange it's traded on. The stock ticker is like a code that you use to look it up online as well as look up the stock's price. So Floor & Decor's stock ticker is FND. So you can plug that into SEC Edgar and you will see a bunch of different public filings. What you want to look for is the annual report, which is also known as the 10K. Once you click on that, you're going to see that there's a lot of different sections. You're going to want to read first the business section. That is what is going to explain what the business is. There's also what is called the MD&A, which is the Management Discussion and Analysis section. That is also going to be really helpful. Now, again, for a company like Floor & Decor, you will be able to read this, understand they are a flooring company, their advantage is their selection, their low prices, and their in-stock inventory. They sell a lot of flooring to professional flooring installers as well as walk-in customers. You will be able to understand that just from reading that. You will also be able to understand how many stores they have, how many stores they plan to have, what their goals are for the future. They lay it all out very simply. And the idea of a flooring retailer is something that is very easy to just understand without needing much context of the industry or the product. Now, that right away gives you some idea of the business you are looking at. And from right there, you can already figure out whether or not this is something that you think you'll be able to understand or not. And what I'm alluding to here is a very important concept. It is called the circle of competence. The question is whether or not, if you continue to research this company, is it going to be something you're actually going to be able to have a strong opinion on? Right away, you should know. I'm not saying that you need to figure out the flooring industry right away. The question is, are you going to be able to? And so in contrast, maybe we can think of a company like AMD, which makes computer chips. If you were to read their annual report, which I recommend you try skimming it too, you will see that it makes very little sense unless you have some idea of the industry, unless you know what an FPGA is, what a GPU is, a CPU. All of these different acronyms are very technical, and AMD does well for very technical reasons that are hard to understand if you have no experience in the semiconductor industry. Now, I'm not saying you can't learn. You absolutely can learn all of these things, but you should be aware that it's going to be a much harder thing to do. And there's also a much higher likelihood you will miss something because you won't know what you don't know. Whereas with the flooring industry, it's probably easier to figure out what you don't know. With flooring, right away, we know, okay, we have to worry about competition. We have to see whether or not their product, how it ranks versus others. How's their distribution versus others? Do they have any advantages in sourcing? How much of a moat do they really have versus competitors? All of these things. But you can kind of get a sense that you would be able to understand why one flooring product is better than another. If the prices are lower, that's one reason. If the selection of the retailer is better, that's one reason. If they're able to have more in stock inventory, that's one reason. And again, all of that is laid out in their annual report. In contrast, if you were trying to understand why AMD's GPU, CPU, FPGA ranks against someone like Intel's or the many other different semiconductor providers, you won't be able to tell that easily. In fact, unless you are really an industry expert, you won't be able to tell it all. And so people who invested in Intel, they actually missed that Intel was in an inferior position relative to sort of NVIDIA, TSMC, AMD, even though those are different in the supply chain. They all kind of together presented a formidable competitor that is overtaking Intel. Now, if you were in the semiconductor industry, it is very likely you could have seen that coming, because what you would have seen is that the architecture of the chips, this gets a little technical, but I want you to understand why this is harder to understand. So the architecture of the chips moved from something that was called CISX to RISC. Their x86 program was now being overcome by different architectures, by ARM namely. And so you don't need to understand any of that. But my point I'm making to you here is that it got very technical very quickly. And personally, I've read a good amount about the semiconductor industry, and I still do not feel like I know enough about it that I would feel comfortable investing in one of those companies, because you really want to know a lot before you do. And so if it is too complicated, move on. Again, the point is to get stocks off your list as quick as possible, because you don't get extra money for making it harder on yourself. What you want to do is you want to find the low hurdles that you can step over, not the high ones that you need to leap over. You can make just as much money in a flooring retailer as you can in a semiconductor company. And so make it as easy as possible. Now, I know semiconductor investing may be easier for some people than others. If you're an electronic engineer, that's great. I'm not saying don't do it. I'm just saying find out what is in your circle of competence. So once you are doing that, and you kind of get to the point that you know what the business is doing, you feel good that you can understand it, now is when you need to get into the real research part. This is where you are going to be doing what is called scuttlebutt. Scuttlebutt is a word that Phil Fisher popularized, who is a very famous investor, and actually Warren Buffett, one of the most successful investors of all time, credits him with teaching him very critical things in how to invest. And so he uses something called scuttlebutt, which is basically you use your abilities to try to figure out why a company is successful versus others. Now, this is a really important aspect of research, perhaps one of the most important. This is where you are utilizing all of your abilities to try to find out why customers love the product, what competitors are doing in response. Is there anything that they are doing that a competitor cannot do? Is there anything in their model that is hard to copy? What about employees? Are they happy working there or not? How much money does the business make? And so if you remember in a previous video, we talked about how great companies create value, capture that value, and protect that value. Scuttlebutt is all about figuring out how they do that. Now, we are very lucky we live in the age of the internet, because it has made this a lot easier. Whereas before, he had to individually go out to different customers, industry executives, competitors. You now have the ability to use the internet. So you can go to Reddit. There'll be discussion forums talking about different products, services, businesses, people complaining. You could go to Yelp. People may complain about service in a store. That's very good to know. You can go to Google. Google will give you all sorts of different articles, blogs, people that either love something or hate something. You could go to YouTube. You could search up reviews for things. You could see people using the product. And maybe you're not even looking for a product review. You're just looking, hey, I want to know about flooring installation. And it turns out Floor & Decor is showing up very often in those videos. Whatever it is, however you want to do it, get creative with it, but use the internet and really go wide to try to understand this. In addition to that, though, if it's a retail company, go to the stores, talk to the customers there, talk to the employees there. If it's a business to business company, you can try to reach out to them and try to understand how they like working there. You can ask all these questions. It does get a little bit harder. There is something called expert calls, which is usually what professional investors use. And that is actually where a professional investor pays someone who is an industry executive to tell them about the industry. And so if you have access to those, AlphaSense is the name of one of those, then absolutely utilize that, because it gives you a lot of this sort of scuttlebutt that we are talking about. Once you get to the point that you feel good about how this company is creating value, how it's capturing it, how it's protecting it, you know that the product is good, you know people love it, you know it's very hard for competitors to come up with something similar. Now is the point where you want to go back to the history, because in the history, you're going to be able to understand how they overcame different hardships. You're going to be able to understand how good management is at responding to different things. If you research a company like CoStar, you're going to find out in 2015, they purchased a 5th tier apartment listing site called apartments.com. Then they put $1 billion into it to make it a #1 site. Now, if you look at the company today, you may wonder why'd they buy homes.com, right? Except if you knew the history, you would understand why they did that. They're trying to recreate that same sort of move again for residential homes. Now, I'm not saying you need to agree that they're going to be successful. I'm saying you need to understand these decisions. Why are they doing what they're doing? And a lot of that shows up in the history. You know, you could go all the way back to the early founding of Amazon in the late 90s, and Jeff Bezos laid out right then and there why Amazon would succeed. He said that customers will never want to pay more for things want less selection, or want something to arrive slower. And so what that means is that they can focus on just these three consumer preferences. And as long as they are doing a very good job of that, they're going to continue to do better over time. You can imagine their offering in 2000 was very bad relative to what it is today. Except as long as they were getting sales back then and they continued to improve on their consumer value, it would only continue to get better over time. Now, you could see that was right there in the history, what they were really focusing on. And it's still generally the same things they're focusing on today. So just a quick recap, what you want to do is you want to first get a list of stocks. You want to second, try to understand the business, whether or not this is something that's going to be in your circle of competence. And you're going to third, want to do all of this sort of scuttlebutt research, as it's called. Now, just in terms of sources, there's the public filings. That's going to be the annual reports. There's also quarterly reports. There's also press releases. Also, really important, every company has its own investors relations page. Sometimes they will post material on there, like presentations, that will not actually be in the SEC documents. And so make sure you always go to a company's IR page too to research a company. If they have something called an investor day, that is going to be a very good source to start with. An investor day is where a company usually lays out everything you need to know about their business. And occasionally they'll also have an investor day presentation, which is also a very good source, a very good place to get sort of that high level overview. Then you have the earnings call transcripts. Those are for most companies every quarter, they have an earnings call and they will talk on it. The analyst, the Wall Street analyst will ask questions on it and you get a transcript to be able to read their answers to all of those questions. So that is another very good source. Then in addition to that, you're going to want to do all of the sort of scuttlebutt that we talked about. That's searching on Google, searching on Reddit, searching on YouTube, whatever sources you could think of, Glassdoor for employee reviews, whatever it is. And that includes calling retail stores, that includes visiting stores, that includes talking to people that work there, talking to customers. Maybe you want to run a survey on your own. All of this is involved in the research process in order for you to get to the point that you have a lot of confidence in the value this business is creating. Now, one of the most important aspects of this, and something that could very quickly allow you to axe a company off your list, is what you see in the financials. Now, we will save a discussion of that for a future video, but to just not leave you hanging, you want to see, generally speaking, two things. One, you want to see earnings are steady to increasing, which you should look at net income. And second, you want to see positive free cash flow. And so just a very clean and easy way to calculate that is going to be operating cash flow less capital expenditures. Capital expenditures will usually be on the financials under the name of purchase of property and equipment. Now, again, we are going to get much more into that in the future, but those are just two quick things you're going to want to look for. You're going to want to see both of those numbers are positive to increasing. And so this video generally though is about how you qualitatively research a stock. In the future, we will get more into how you quantitatively do it. And now if you're still unsure though about some aspects of this research process and what you are looking for, check out this video here where we talk about what makes a business a great business.